Jersey has thrived as a finance centre since the 1970s. This small island, measuring just 9 miles by 5 miles, has a financial services industry that, by one recent estimate, accounts for £1.2 trillion worth of assets. But the banking crisis put pressure on Jersey by exposing its reliance on wealth management. When interest rates fell, so did bank profits and tax revenues. Now, its politicians and business leaders are taking steps to branch out into new sectors, such as digital services and mining. Earlier, I met Senator Philip Ozouf, Treasury and Resources Minister on the island. Philip, could you give us your sense of the outlook for the Jersey economy?
I think we've shown to be remarkably resilient during the financial downturn. As you say, we've been affected by low interest rates and by the crisis and contagion around the world. But as we stand today, we've got government finances which are now in surplus. We've got GDP of assets of about 100% on our Jersey balance sheet. So we're in a very strong position compared to a lot of other jurisdictions. There's been a flight to quality. So I'm quite optimistic about the economic outlook for Jersey going forward.
What precisely is the problem that the island's leaders are trying to address by this strategy of diversification?
Well, I don't think it's addressing a problem, it's almost embracing an opportunity. Jersey's always been adapted and changes to new conditions. We've looked in the last few months of our financial services industry, clearly a changed world in terms of tax and transparency. That's changed the nature of a lot of financial services that have happened in offshore centres. But we are confident in financial services, but we also want to develop new lines to the Jersey offering, particularly in the digital area. We certainly want to rejuvenate and keep tourism into the fantastic thing that tourism has delivered with a range of 4- or 5-star hotels, restaurants of a scale and size that you'd never find for a community of 100,000 people. Tourism is vital. We welcome hundreds of thousands of British visitors every year.
And what is the digital services push? What does that involve?
We don't have any sort of mining opportunities or other natural resources. We've only got our people and our brain power to use and to trade. And so digital services is one of those service-based industries which is perfectly suited to Jersey. We've got excellent telecommunication links with France and the United Kingdom, very resilient. We have our own legislative system so that we can craft our own laws to deliver perhaps intellectual property solutions to businesses around the world that other places couldn't.
You said that Jersey has no mining resources, but it seems to be attracting mining companies. Why is that?
Because Jersey's a low tax, stable jurisdiction with a good advanced corporate law, which has attracted the headquarter businesses of some mining companies around the world. And we do specialise in niches in Jersey. And the mining sector has proven to be a very good niche for Jersey to develop, and I'm quite confident about its future place in Jersey.
You're also heading abroad, trying to broaden your finance, the scope of your finance markets elsewhere. Which of those international markets do you think are most fertile? Where are you focusing your energies?
Well, I mean, we are a secondary centre to London. We're within the Sterling area. And we have identified about a decade ago that the Gulf Middle East region was a key market potential for us. And we've certainly now got an office in Abu Dhabi. We've got a very strong franchise in countries like particularly the UAE. So we're looking in the growing developing areas of the world where wealth is being created. Jersey's trust law, our experience in looking after wealth, I think is well known around the world. So we're basically tracking where future growth is being made and setting up offices and communicating what we can offer to wealth managers in those new regions, Asia, Africa, etc.
Jersey, like other Crown dependencies and overseas territories, has come under international pressure on tax by governments which are trying to claw back tax revenues from what they perceive as tax avoidance. Do you expect more action on this? Is Jersey going to come under pressure, and should investors be worried?
I absolutely don't think that investors should be worried. One of the very strong messages that we can put out about Jersey is the very strong state of our public finances, which means that we can keep the tax rates that we have at the rates that they are, and we can afford them without needing to borrow. As far as tax transparency is concerned, it's absolutely understandable that governments are doing everything they can to safeguard their revenues. And the nature of what is acceptable in terms of tax planning and tax avoidance has clearly changed. But Jersey made decisions more than a decade ago to pursue quality, real business of substance, and that's what we seek to continue to grow in the future. So we're not afraid at all about the increasing transparency agenda. We're looking forward to signing with the Treasury in the UK the FATCA agreement, which will show full transparency of information between Jersey and the United Kingdom. And we're looking to develop bilateral agreements with other countries. We can trade our financial services in those jurisdictions, and Jersey will be, of course, transparent.
Senator Philip Ozouf, thank you very much for joining us.